And now, just I will get into a little bit more about his educational background. He's multilingual, speaking 5 languages: English, French, Armenian, Spanish, and Mandarin. And academically, he is as impressive as it follows. He holds a master's in Chinese law, global executive MBA from London School of Business, Columbia University, Hong Kong University, and masters in transnational law, along with bachelor's law earned with the top honors. Now, it is a rare to find someone who blends legal, academic, regulatory, and entrepreneurial and investment expertise so seamlessly. And that is precisely why we are here, so privileged to have you, sir, here today. Please join me giving a warm welcome to Mr. Henri.
Excellent. Thank you very much. Thank you. Appreciate it. Thank you very much, guys. I have a pretty loud voice. I don't think I need a mic, but just want to make sure for the recording you need the audio input, right? For the recording. Yeah, the lapel one I can use. That will be way easier from that perspective. Guys, super excited to be here with you all today. Thank you very much for being here on a Saturday morning so we can share our passion for the future of money and the future of finance with you all. As was mentioned, by the way, I hate to be introduced as an expert. I always say if anybody tells you they're an expert in crypto, you see the door there and you run away. I can tell you I've been in this space now for over a decade. I spend 24/7 of my time in this space. And I have absolutely no idea where this industry is going to be a month from now. Because this industry moves so quickly. Can I get rid of this or not? I'll keep the mic. I think it's easier, right? I have no idea where this industry is going to be a month from now because this industry moves so quickly. Only the last 4 or 5 days, we had groundbreaking changes. My goal today is very simple. I'm going to share with you not only the fundamentals of Bitcoin and digital assets, but also share with you some of the latest global trends that we are seeing in the history of finance. Our kids and our grandchildren will look back at this period that we're living now and say, wow, I cannot believe you were there when Bitcoin was $100,000. When we were coming up with this concept of stable coins. So we'll discuss a lot of these things today. We'll have some fun. Thank you for the introduction. This is literally what I've been spending the last decade of my life in it, and hopefully I can share with you all today. I have some good news as well. Thankfully to the organizers as well. You all get at the end a copy of my latest book actually. I spent an hour personally dedicating them to each one of you as well. So each book is dedicated to your own individual name. Make sure, I guess the Ashik and the team will make sure you guys get your copy that has been provided as well. But let's go before my goal today. I'm just going to focus on 5 big items. These 5 major developments that we are seeing have an impact on the future of money. And by the way, throughout the presentation, I'll share with you also what's happening in the UAE, which has now become, by the way, the global crypto hub. In the 5 minutes walk, the 1 square kilometer where we are right now in DWTC, we have 95% of global crypto volumes that are passing by the way here. The top 10 crypto firms are literally 1 minute walk from where we are here. 4 years ago, it was 0. And it shows you literally how these things have evolved. The world's first crypto regulator is literally 30-second walk from where we are. And also talk about what's happening also in India. Obviously a big element. I'll talk about what's happening with SEBI and RBI and some of the big developments we're having on the region. But before we talk about the future, before we talk about the impact this has on the future of financial services, it's important we take a step back and we look actually at the history of money. And what's very important if we think back of our old school economics 101 classes, is if you go back to our economics 101 classes, the definition of money, has evolved over the years, but always met these 3 different items: a unit of account, a medium of exchange, and a store of value. But what is very fascinating is what we believe as a society meets this definition has changed radically over the years. If you think about back in the day, so many parts of the world used to be cattle. The word capitalism comes from the root word of cattle. You know, we used to have salt. Probably one of the most successful forms of money we've had in history. The word salary, that we all work for, comes from the Latin saltus, salt. The British expression, he's worth his weight in salt, comes from that era. Where we should take salt, wrap it up, try to actually make it as unit of account and use it in day-to-day business. Cattle. When our American friends say, I give you $1, $2, it comes from bucks. Then things continue to evolve. Across Latin America, the most successful form of money that we've ever had used to be, believe it or not, cacao beans. By the way, also, where we had the first cases of forgery, where forgers would take the cacao beans, remove the cacao, put it with mud, and try to pass it off as money. Think of the move, evolve. Cowrie shells. Probably the most single form of successful money we've had over centuries has been good old cowrie shells. Across Africa, entire businesses, trade was done using good old cowrie shells. Today, even the Chinese character, for example, for money, bei, is based on these seashells. And by the way, this is also one of the first cases of quantitative easing. At the time, the Europeans realized, wait a second, we can go to the Seychelles or the Maldives, get these seashells, and come and flood the African continent. And that's exactly what happened. Today's actually, Ghana's currency, Cedi, is also based on that. Then China started playing a big role as well. China, by the way, very interesting, one of the only empires that never used gold or silver. They used to use like non-precious metals. The good old Chinese money at a time used to have gold in it, so you could put a bar of metal and transport it and move it around. But also, then we had the first cases of standardization of money, in what we call in French seigniorage, based on the word seigneur, which means master. At the time, the Emperor Croesus, which is now between where is Turkey and Armenia, realized that actually commerce was taking a lot of time. You had to weight your gold. What he did, he came up with the idea of standardizing money. A currency that is a mix of 75% gold and 25% silver, which he called the electrum. And this basically boosted commerce and actual business as we do. The expression, rich as Croesus, comes from Croesus, who actually come up with this. At the time, by the way, very interesting, 3 businesses popped up immediately as soon as we standardized money. One was commerce. You don't need to weight your gold anymore. With standardized money, we can do business, and bazaars started popping up. Second, by the way, it's an interesting one. Gambling. Gambling used to always exist. Now gambling with money started becoming more common. You guys know what the third one is, by the way? Brothels. At the time, actually, brothels popped up as soon as we started having standardized money, and actually the data now in Turkey shows that as well. Very interesting. Then China came up with actually paper currencies. Back in the day, the Chinese Empire, you would enter, as we see now in Marco Polo's journals, you would give any asset you have, and the Chinese government would give you this beautiful piece of paper money. And this was the only legal tender in the country. They would keep all your assets, give you this. It's a bit like a monopoly money, but inside the country. And that's how they were actually using it. Things continue to evolve with our good old American friends. In the 1860s, came out there with the idea of the greenback. The US dollar, by the way, called the greenback, because at the time it was printed in green, because we figured we're never going to be able to actually people to at mass print in color. Thus, we start printing it in green. But what's really interesting with the US dollar, and a very important part of the presentation today, is throughout history of the US dollar, it was always backed with gold. For the majority of the history of the US dollar, you could take your US dollars, get them back, and actually get the equivalent amount in gold. But things started changing. This change in 1933. One of the craziest moments for me that I'm shocked that more people don't talk about this. In 1933, FDR basically came out with actually government order that every single American had to return the gold that they have and return it to the government. Otherwise, it was a $10,000 fine and 10 years in prison. Imagine if this happens today here, we're in India. The government comes and says, all the gold, you have to bring it back, otherwise you're going to 10 years in prison. There was one exception. You guys know what was the exception? Dentists. So they can continue doing their dental surgeries using gold. But at the time, the government confiscated the gold, at the price set by the government, by the way, and then they got the supply of gold, and the next year, by the way, they revalued the dollar of the gold. It's something that there's a lot of fear may happen right now in the US, actually. But what's crazy is from the 1933, for decades ahead, the ownership of gold was illegal in the US. You couldn't buy an ETF of gold. You couldn't go to the market and just buy a bar of gold. It was literally a criminal offense. And things started continuing to evolve. In 1944, towards the end of the Second World War, where the meeting took place at Bretton Woods, where over 100 countries came together, and where at this particular meeting, literally as this picture, you see it here, two organizations that really dominate today's financial world were created. One is the World Bank, and one is the IMF. With the idea that we're going to make the US dollar the reserve currency of the world, and the apparatus that is set in place is there to ensure that actually that remains the case. And then something very important happened in 1970. On a Sunday night, President Richard Nixon went on national TV and said that from now on, the US dollar, the US is not guaranteeing its gold backing of money. From now on, US dollars are only backed by what we have in the back of every US dollar. In God we trust. That's it. From what we call a fiat currency, which comes from the Latin word fiat, which means it is. Literally, money became backed by your trust towards yourself. This, by the way, was catalyzed by good old traders. The French called the bluff, actually. At the time, French, like good old quant traders like we have today, the French realized the Americans probably don't have the gold they're saying they have backing their dollars. And they called the bluff, as we do in poker, for example. They literally brought military ships on the east coast of the US asking for the gold back. And what did the US do on a Sunday night? Richard Nixon basically called that all money was fiat currency for now. And this is an anomaly in the history of money. If you look back at the last couple thousands of years, the last 50 years is a complete anomaly of how money is backed. Because literally, it's only backed by your trust towards your God. And then, of course, things continue to evolve. And in the early 2000s, we started having digital payments. So if I want to make a payment, for example, if it's a friend, I can use apps like PayPal, using the UPI network in India, but I'm still using intermediaries, where I send money from one person to another, and it goes via an intermediary that is sitting there, that is debiting and crediting my account. But it became digital. Until basically 2008. Where a lot of the trust that we had towards our financial institutions basically disappeared. And at that time, literally 6 weeks after the collapse of Lehman Brothers, on Halloween Day, October 31st, global trends that we are seeing. And my goal is very, very simple, is to share with you some of these latest developments, empower you with this knowledge, and then let you make your own decision on what the impact will be on your work, your business, on the financial services you're involved in, but also most importantly for you personally as well and your family as well. And I'll repeat this towards the end of the presentation as well. I really believe we are now living in a historic moment in the history of money and the history of finance. Our kids and our grandchildren, GDP being honored by the whales that we know. In crypto, it was actually 0.14% of crypto transactions were linked to illicit wallets. And this is because it's very traceable. As was mentioned in my introduction, I'm the co-founder, I chair the board of the world's biggest crypto compliance services firm. We're the back end of many crypto companies. We serve regulators. A lot of the banks actually get in crypto. We do the managed services for transaction monitoring, KYC, and services. I can tell you the level of compliance that is in transparency in crypto is way higher than traditional banking. And this is why this stigma that existed before that it's all used by money laundering cannot be further from the truth. And also what's happening is we've seen the rise of tokenization, what we call now real world assets. Where, let's say, I personally want to get exposure to Dubai real estate. I cannot come and buy this building. I don't have the money for it. But maybe I can buy 1/10,000 of it, a fractional ownership. Think about REITs that we have in the traditional world, to the creation of Bitcoin. And this asset that we have then brought up a new debate. Is Bitcoin the new digital gold? Gold that we know so well here in the Middle East or in India, other parts of the world. Is Bitcoin a better version of good old gold that we have? And the big question also, and this is something I want you to think throughout the presentation. Over the years, we started with cattle, salt, animals, and even the last 500 years, if you look at a global level, we've had the reserve currency, what we believe was the store of value, has changed every 100 years or so. Today, if I come and I want to pay you in Dutch guilder, you'll laugh at me. You'll say it's very cute. But there was a time this was the reserve currency of the world. And the big question is, as we're evolving and the geopolitics of the world is changing, can what we believe is a reserve currency change? As it has done over and over and over and over and over throughout history. And this is why I really want to take a couple minutes to really focus on the basics of Bitcoin. If we're saying it's digital gold, is it real? Is it fluff? Is it snake's oil? This is the document. On Halloween Day, as I was mentioning, Satoshi Nakamoto, by the way, on this registered 6 weeks before this website, an anonymous website, comes up with a Bitcoin, a peer-to-peer electronic cash system. Where for the first time, this comes up with the mechanism that we can send value from one person to another without an intermediary. By the way, this is 100% a Nobel Prize of Economics, for sure. Interesting, by the way, the Nobel Committee does not give you a Nobel Prize if you're anonymous or if you're dead. I never figured out why they don't give this if you're dead. If you have the bad luck of dying, before you actually people recognize your research, that's it, you cannot have it. Go figure. But this is why, for sure, this is Nobel Prize in Economics, the Bitcoin. But until we find out who Satoshi is, if we ever do, unlikely we'll do. But the real innovation is this. Is right now, we're using intermediaries. Many of you work for banks, financial services providers. We are actually doing even digital payments using intermediaries. When I send money using my Emirates NDB app, when I use PayPal, I use Kareem, I'm using a firm that is doing debits and credits in the middle. And Bitcoin allows literally for two people to interact completely directly without any intermediary. I could send you $1 billion worth of Bitcoin right now, here on the spot, peer-to-peer, with no intermediaries, for negligible fees. But how is this working? You think it's very cute, we talk about Bitcoin and everything there. How does it work? Well, actually, there's a couple of features in it. Okay. Let me just maybe first show you guys the mechanism, how it works, to pretty simplify it. When we talk about Bitcoin, okay, we talk about first, you often hear the word blockchain. When we talk about Bitcoin, okay, we talk about first, you often hear the word blockchain. Interesting fact, by the way, Satoshi in his white paper never uses the word blockchain. He uses the term blocks are chains of block, but he never uses the word blockchain. You guys know who coined that term? The Economist. The Economist in 2015, I have it framed in my office, comes up with the cover called The Trust Machine. And in there, they use the term blockchain. 2 weeks later, Bloomberg runs an article where they refer to the term blockchain. And from there on, all the Google searches and everything picks up, and it becomes mainstream language. When I started in crypto, we didn't the word blockchain didn't exist, we used to call it Bitcoin, the Bitcoin network. And then gradually it evolved. But how Bitcoin works is very interesting. Today again, like I mentioned, when you're using financial intermediaries, you're using a bank that has debit and credits. In the Bitcoin blockchain, the mechanism is very, very different. Every day, amazing. Thank you. This is the microphone. This is for your camera. Perfect. So basically, every day let's say there's transactions going on across the industry. For example, we'll have, let's say, A sent to B 1 Bitcoin. Okay. And then we'll have C sent to D 2 Bitcoin. So random transaction that I'm putting. What happens is all these transactions are happening around the world of Bitcoin. In the normal world, what do? At the end, you have your business, you send to your accountant, your bookkeeper, who takes these various transactions, comes up with your debits and credits, your cash flow statement, your balance sheet. The accountant does that, or your bookkeeper does that. But how do we do this in the decentralized world, where there's no bookkeeper? These transactions are happening. Every 10 minutes, the Bitcoin network does a pause. Not a pause, but let's say they call it time, where we need to decide how are we going to order these transactions that took place. A sent to B 1 Bitcoin, C sent to D 2 Bitcoin, and everybody's noting these things down. A lot of people are bookkeepers. Everybody can be a bookkeeper. But how do we decide who's going to be the one who's going to put D be the source of truth that's going to go on the Bitcoin blockchain? So how do we decide that? In the normal world, you have your accountant that does the work, and then at the end of the year, you go to your big 4 consulting firm, the PwC, EYs, and the BDOs, and they will say, okay, we're going to review the financial statements, and I should tell you that this is an accurate and fair statement of the financial situation of the business. Okay. Crypto, we don't have that. So what happens is literally every 10 minutes, there is literally a game of chance that happens. Where literally, we call this now Bitcoin mining, where literally it's the equivalent of throwing the dice. So imagine you throw a dice, everybody can become a miner, all of you. You throw a dice, and whoever gets the first double 6 becomes the miner. That's it. It's pure luck. It democratizes access to who becomes that accountant, that big 4. Anybody can do it, and it's literally a game of chance. If you're the first one with a double 6, you become the one that is able to put your version of the ledger on the Bitcoin blockchain. And then what happens is every 10 minutes, this happens again and again. And a new block is added to the blockchain. But what happens, make sure that nobody can change this. Once we've agreed on a set of transactions, every block contains the hash of all the previous transactions. We use hashing propriety, so basically every data that you have across the entire history of Bitcoin is in each block. And that gets added to each other. To give you the analogy, is imagine if you're getting your PwC audit, and the audits of not only your company, but all the other companies are actually in that audit, and nobody can change it. And this is how every 10 minutes, a new block is added to the blockchain, Bitcoin blockchain. We call this Bitcoin mining. Right now, the term that every 10 minutes, a new block is added is called Bitcoin mining. And the fact of throwing the dice is actually basically what they call proof of work. Is the idea that this is what Bitcoin mining is. But you say, okay, man, this is easy. If it's just getting a double 6, anybody can do it. This is why the Bitcoin blockchain is very smart. Every 2 weeks, there's something called a difficulty. Because you may say, you know what, if I just need to be the first one to get a double 6, then I'm smarter than that. Instead of using 2 dice, I'll use 8. And mathematically, my odds of getting a double 6 is very high. And the Bitcoin blockchain knows that. So what it does, if there's a lot of people throwing the dice, it will make the level of difficulty higher. It will say, well, now you don't need to have a double 6, you need to have 8 6s. And the first one that gets 8 6s becomes the one who puts the block on the blockchain. And this is what we call the difficulty level. In the early days of Bitcoin, you could mine this, you could do this process with a small computer, a laptop. That's what a lot of gamers were using their GPU to actually mine Bitcoin. Now these are highly sophisticated machines that throw the dice around 800 trillion times a second. This is why there's a lot of electricity. There's actually one of the biggest mining sites is in Abu Dhabi, here not far from here. There's a lot of what we call Bitcoin, and I'll talk about that later in the presentation, how that happens. But the beauty here is this Bitcoin mining happens every 10 minutes. You don't need the auditors. You don't need the bookkeepers. Anybody can be what they call a bookkeeper, which we call validators. Anybody technically can go buy these Bitcoin mining machines and mine a Bitcoin and try to do the process. And this can be anywhere from anywhere around the world. By the way, for your efforts of throwing the dice, we give you a reward. Whoever finds is the lucky one that puts the block on the blockchain is rewarded by a set number of Bitcoin. In the early days of Bitcoin, it used to be 50 Bitcoin every 10 minutes. Then it became 25. Then it became 12.5. Then it became 6.3. And now it's 3.3 Bitcoin every 10 minutes. Every 4 years, that gets cut in half. And what we call the Bitcoin halving. So the reward you're giving to the miners every 4 years for doing this work goes down. This is in short what Bitcoin mining is. And the interesting fact with this phenomenon is that this process happens 24/7 all the time, regardless of where people are, and it just keeps going and going. But also this process is very public. For example, every transaction that you see in the Bitcoin blockchain is fully public. So when people tell you, Bitcoin is used by criminals, Bitcoin is used by money launderers, it's absolutely the worst thing if you're a criminal to use Bitcoin. Well, let me give you one piece of advice. If you want to do something illegal, do not use Bitcoin. Do not use crypto. You will 100% get caught. I do a lot of work with law enforcement over the years. I'm friends with many of the secret agents that went to actually bust the first crypto criminal groups back in the day. Really, law enforcement loves crypto. Because let's say if I'm laundering money or I'm not paying tax evading taxes, let's say from India I'm using Mauritius and I'm using other countries' trust structures, governments have to go to subpoena, they have to go to that country, they have to go to law enforcement, it takes time. In crypto, literally in 2 minutes, I can have the entire history of that chain, I can trace all the transactions. So even from a personal promotion perspective for law enforcement, they love crypto because they can get these enforcements very, very quickly compared to the traditional way. But everything is public, and this process of every 10 minutes a new block is being added happens, is very, very public. Every 10 minutes, you can go online now and look at who was the lucky miner who put that lucky block on that block. All public, everybody can see this. And this little experiment that started literally 17 years ago last month, is now an industry worth over $4 trillion in value. This industry has grown dramatically over the last couple of years. And this is why you say, okay, this is very good. We have Bitcoin, we have all these transactions moving on. But why is this the future of money? How can this have such a big impact? Well, a couple of things. Let's focus on the big 5 items that I mentioned. The first one is the US crypto revival. As I was mentioning, I organized my first Bitcoin event in March 2014. I used to live in Hong Kong back in the day. I'm from Canada originally, but I moved to China in my 20s, and then I was in Hong Kong for about 15 years. Hong Kong, from about 2010 to COVID, was the world's epicenter of crypto, without any doubt. But then also, the US was a very difficult place to be in crypto. The last couple of years in the US were very, very challenging in the digital asset space. And you could not blame the Americans. There was a number of bankruptcies that took place, from Three Arrows Capital, Celsius, BlockFi, to one that happened literally 3 years ago this month. Their office used to be here at 1 Central 5. Yesterday, I just recorded for my podcast, the regulator of the Bahamas. It's going to be published this week on my YouTube page. The first exclusive interview they gave, where basically they shared what happened behind the scenes with Sam Bankman-Fried, the CEO of FTX. But it was actually a very difficult time in crypto. And then, as a regulator, especially post-FTX, if you're not going after the crypto industry, frankly, you're an idiot. Because it was such an easy target. Everybody hated crypto. It was one of the few bipartisan things in the US. It was a very easy target to go after. But things then started gradually to change. Donald Trump started discovering Bitcoin. But it was not always the case. Now you hear about Trump being all pro-crypto. Back in the day, Donald Trump was very, very anti-crypto. You can see even here his Twitter post from 2019, where he says, "I'm not a fan of Bitcoin." But, like many of us in life, people often change their mind. But he was very anti-crypto from first. For example, this is one of his interviews on TV.
Bitcoin, it just seems like a scam. I was surprised. With us it was at 6,000 and much lower. I don't like it because it's another currency competing against the dollar. Essentially, it's a currency competing against the dollar. I want the dollar to be the currency of the world. That's what I've always said.
I want the dollar to be the currency of the world. I don't like Bitcoin. But then, like many of us, people change their mind.
This afternoon, I'm laying out my plan to ensure that the United States will be the crypto capital of the planet and the Bitcoin superpower of the world. And we'll get it done.
And then he came and actually completely did a pivot. And literally now, that's a whole different debate. I won't discuss that, especially since it's being recorded. But let's say it's a massive controversy now in the crypto community. Because not only President Trump, but all his entourage are extremely, extremely involved in digital assets. Not only him, his wife launched her own coin, Melania coin. He launched his Trump coin. And his sons, his Secretary of Treasury, J.D. Vance is very public and he holds a lot of Bitcoin. The Secretary of Commerce owns literally 5% of Tether, the stablecoin company I'll talk about in a second. His sons are very, very active in it as well on that perspective. But even they made some big changes. For example, the US made a strategic Bitcoin reserve, where they said, in the same way that we have gold reserves, we have Fort Knox, we want to have a strategic reserve of Bitcoin. And that's what they did. And there's been a complete policy shift in the US. From a regulatory perspective, government perspective, I would even argue now the US has become too pro-crypto. It's gone way too far. Like it's going way too quickly, and there will be issues potentially down the way. But this actually has had a massive impact, not only from increased regulatory clarity, but also when it comes to increased institutional adoption. We'll talk about that, but also this has really changed the perception that people had on digital assets, in particular Bitcoin. Which brings to the point of the further adoption of Bitcoin. Again, Bitcoin now is an asset that is worth over $2 trillion. You have hundreds of billions of dollars of Bitcoin that trade every day. And what you see is also, in the early days, there was a very anti-Bitcoin sentiment across many of the players we know in the financial services world today. A good example is the chairman of the biggest financial services firm in the world, Larry Fink.
But most importantly, what I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world, how much people are trying to move.
How much money laundering there is in the world. And he believes there's not even demand from customers.
Don't your clients want crypto exposure?
No, I don't believe any client has sought out crypto exposure.
Really?
Yes.
But at some point they might. Do you need to be prepared?
And I don't, at the moment, no.
Interesting. Yeah, Goldman Sachs is building out a cryptocurrency trading desk. Morgan Stanley is.
Well, I'm not in the trading yet.
Morgan's doing the same
Yes,
thing.
because there's elements of people who are looking to trade it. I have not heard from any one client they're looking for.
I have not heard from any client that is looking at buying Bitcoin. The ETF launch happened a year and a half ago. The Bitcoin ETF launch was the most successful ETF launch in history. Out of 5,000 ETFs that were launched, 30 years of data, this has been now one of the biggest drivers of P&L within BlackRock, the most successful ETF they've ever had. There's over $150 billion now in Bitcoin ETFs. And believe it or not, it just flipped recently, by the way. Until really 2-3 months ago, there was more AUM in Bitcoin ETFs than even gold ETFs. And also, it's not only companies or people, but also nation states were getting involved. Countries are getting involved in Bitcoin. For example, a small country of Bhutan. There's a small country, very difficult to even go visit, very Buddhist, very quiet. This country slowly realized, hey, maybe we have a lot of hydroelectricity, maybe we should start mining Bitcoin. The country now holds hundreds of millions of dollars of Bitcoin. They were able to invest in their country, basically created by the city that they had. They're building this entire technology city now, all powered by digital assets. Not only them, you have countries like El Salvador, the country with the highest crime rating across the Americas, highest murder rate per capita in the world, made Bitcoin legal tender. And now basically you have all these large crypto companies even moving headquarters there, and has become basically a complete turnaround of that situation. And what's interesting though, is when you look at right now Bitcoin holdings, the US is by far the country that owns the most Bitcoin. And this, by the way, last week there was the record biggest seizure in US history, where the US government seized $15 billion from a group called the Prince Group in Cambodia and China, where they're doing all the pig butchering scams. And now they have over $35 billion of Bitcoin. Second, by the way, is China. China has billions of dollars in Bitcoin, often again from seized assets that they hold. And what's really interesting is when you look at it, the narrative has completely changed. Over the last couple of years, when we were saying nobody cares about Bitcoin, there's no interest, as we heard Larry Fink say, it's all money laundering. Suddenly they realize, wait a second, people are asking for it. In the same way people want gold, people want also digital assets. And also, many people change their mind as well. Nope. Oh, there we go. Oh. 1 second.
You know, a proud scout there. And I learned about it, and I came away saying, okay, my opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though. It is an instrument when you believe that countries are debasing their currency, debasing their currency by excess deficits, and some countries are. I believe we have countries where you're frightened of your everyday existence, and if you have an opportunity to invest in something that is outside your country's control, then you can have more financial control. And so I'm a major believer that there
I'm
is
a
role
major
for
believer
Bitcoin.
in Bitcoin. It's interesting, of course, now that BlackRock can make money, they're obviously talking very positively about it. But it shows you how much this has changed over the last year. For many of you, for example, that work in private banks or banks, you can see how much your clients are asking for it, for example. And I work with many of the banks in the market where initially, because there was no way of making money, we didn't talk about it. We just told clients that it's too high risk, don't touch it. But now that there's ETFs that we can sell and suddenly we can make money on the AUM, or funds that we can introduce and make our kickbacks, suddenly there's a bit more interest. Otherwise, beforehand, frankly, if you're a banker and you're recommending your clients to buy Bitcoin, you're an idiot. Because that money, where I was undoubtedly going to leave the bank, go somewhere else, and you were going to lose your AUM that you're making money out of it. So I don't blame actually a lot of financial advisors that were doing this. But that you're seeing the big shift globally now. And the big question is, remember that Bretton Woods meeting at the start that I presented with the IMF and the World Bank? Now that a lot of the countries are getting involved, especially the US is getting involved. Is this going to change? Are we going to have more countries get active in the crypto space? How is actually the countries that we've had in that meeting going to react? I can tell you until very recently, if any countries brought up the word Bitcoin, immediately the IMF would come after them. Immediately the World Bank would come after them and say, hey, don't even dare dream about Bitcoin. You use your good old US dollars. And if you're not happy, we have a military to come and show you how important it is. And actually, this is how things have been changing around the world. Countries were literally being punished because of actually if they thought about the idea of digital assets. So the question is, with this pivot in the US, how is it going to change the perspective and the landscape of digital assets? Especially now when you look at the growth of stablecoins. And this is very, very important. India, for example, right now is the #1 market globally for stablecoins. If you look at the various rankings every year that come in, where we're seeing usage of digital assets, India is always #1. And we can talk about that in a second as well. But what is a stablecoin? So I mentioned before Bitcoin. Bitcoin is digital gold. It's great. If I give you Bitcoin, you'll be very happy. But the problem is we don't know what the price of that Bitcoin will be a week, a month, a year from now. So how do we ensure that we can actually make, let's say, pay for our rent here at Zentral using digital assets? That's where stablecoins come in. A stablecoin is a digital asset that is backed 1-to-1 by US dollars or actually US cash or cash equivalents. It's worth $1 today, it's worth $1 next month, $1 next year. The purchasing power of the dollar may go down because of debasement or other hyperinflation or any other topic, but it's still worth $1. And that $1 basically that could be cash equivalents. It's mostly actually US treasuries. This little stablecoin experiment, just to put things in perspective, at the beginning of COVID, in January 2020, here, there was less than $10 billion in stablecoins. And now, we're at over $250 billion in stablecoin value. There's over $2 trillion a month that is being transferred using stablecoins. Today, imagine if you're a business person in India or in Malaysia, doing business with a company in Bolivia. You can use a good old SWIFT system. Great, it's going to cost you money, it's going to cost you time, transfer may be blocked, you have to have all those questions. Or you can use stable coins, what happens immediately, instantaneously, for pretty much no fees. And by the way, this works 24/7. I never understood why my bank does not process my transfers on a Sunday. I don't know, maybe my bank goes to church, I never figured out why. With stable coins, it's 24/7, obviously works all the time. And what's really interesting now is actually, and this is the policy consideration, these stable coins are backed by US dollars. They're actually, the companies issuing the stable coins are buying US treasuries. And to show you how powerful these firms have become, Tether and Circle, the two biggest issuers of stable coins, now hold more US treasuries than countries like South Korea, the UAE, or even Saudi Arabia. So you can imagine, the holders of US debt are now companies issuing the stable coins. Many would argue the reason the US is pushing this new initiative of what they call the Genius Act, that basically try to make all stable coins cash and cash equivalent, is because now there's hundreds of more people around the world that will buy US debt indirectly. Especially at an era where the US needs to find new buyers of the debt to continue the game. Companies like Tether that are issuing these stable coins are, in my opinion, now the most profitable financial services company in the world. These are companies that are making $4 to $5 billion of profit every quarter. Tether, for example, has less than 200 employees, including the crypto exchange. There's probably less than 20, 30 people and only focus on the stable coin. And this company is making over $12 billion of profit a year. And it's very interesting because why are people using this? You know, think about it. Stablecoin is pegged to US dollar. There's no cross-border fees when you're sending money from cross borders, and instantaneous and works 24/7. And a big market for this, for example, is often the remittance business we think about. Think about how much people send money around the world, even out of Dubai. The average fee of sending money around the world right now is 7%. This includes the G20, by the way. If you exclude the G20, it becomes in the teens percentages. Between two African countries bordered next to each other, sending money is often 12, 13% fees to send this money. The beauty you get with these stable coins is it really changes the game. And it democratized access to US dollars. If you look at it, for example, in countries like North America, a lot of people are buying Bitcoin as pure speculation or investment. But when you go into emerging markets, you go Eastern Europe, Central or Southern Asia, or Middle East, the biggest percentage of users are using stablecoins. Why? To do business, to transact, and be able to move money around. And also, for many countries, it's become literally a lifeline. We're very lucky here in the UAE. We're very fortunate. We have a great central bank that we trust and is doing a great job. But it's not the case everywhere in the world. If you imagine if you live in Turkey, you live in Argentina, you live in pretty much all of Africa. These are currencies that are being completely hyperinflated very, very regularly, and people are losing their purchasing power. Back in the day, you used to keep US dollars under your mattress. Now you can have literally hundreds of millions of dollars if you want on a USB stick. And this is why you're seeing there's a risk as well. So something, but for example, the RBI is very aware of in India. Beforehand, if you didn't trust your central bank, you would go buy gold or buy US dollars. But there's a limit of how much US dollar banknotes you can keep in your house. And there's a speed of that. You can block number of US dollar banknotes coming in your country. Here, you literally accelerates the entire process. It accelerates the risk of dollarization of your economy. So countries where there is no good monetary policy can actually, they're at risk of actually seeing their economy being dollarized very, very quickly. If anybody, for example, deals with young people in Argentina, it's pretty much all runs on stablecoins. Turkey, an entire segment of the economy now runs fully on stablecoins. China, about 25% of crypto trading volumes is happening in China. Big chunk of it is happening on stablecoins. And what you see is that in the early days, like earlier when I mean 16, 17, the asset that was the most traded was Bitcoin. And now you can see how stablecoins have become the dominant usage of digital assets. Most people's interacting right now with digital assets are actually using stablecoins and dealing with that. And you can see also it's only for businesses. For example, you can see, oh, this is great, stablecoins, I can use them for remittance. My driver is using it when he's sending money back home. But actually, when you look at it, the majority of transactions, a big chunk happens on a business level. For example, almost half of the transactions now of stablecoins are over $1 million. Almost 90% are over $100,000. And countries are realizing this. Pakistan just launched a national crypto strategy. The country is even trying to make its own strategic Bitcoin reserve. And they're trying to attract players because they're realizing so much of the transactions are happening using digital assets, for example. And this actually made me question, are we seeing the appearance of a new SWIFT network? Today, the SWIFT network, based in Brussels, the messaging system that actually is beyond all the banking system, are we seeing the emergence of a new one that is based on digital assets? This was happening, by the way, just before FTX. A number of banks in the US were using crypto rails to make transfers. Until the US government back in the Biden era came and said, hey, we're shutting this down. And that's how you saw the closures of a Signature Bank and many other banks that are involved in the space. But the big game changer here was a bill that passed in the US a couple of months ago called the Genius Act. Trump said it was named after him. Actually, the real reason this was named is actually for empowering stablecoin transfers in the country. With this Genius Act, banks, every single financial institution in the US, in the next 36 months, has to accept stablecoins as cash or cash equivalent and can use it as margin for any financial services transactions. For all of you that work in banks, for example, imagine that in the next 36 months, you have 33 months left now, you have to accept stablecoins. How are you going to plug this into your existing infrastructure? How are you going to do your transaction monitoring on it? In the US, by law, you have to accept it in the next less than 3 years. And de facto, this is going to be the case across the world. And what you're seeing here, there's a lot of things that happen into this. But one of them is the impact on the banks. You know, we have a regulatory regime now, but actually there was a lot of lobbying from the banks in the US saying, hey, President Trump, we love you, but please make it illegal for the stablecoin issuers to pay yield. And the reason is the following. Today, when you have money, you go to the bank. Let's say I go here to my lovely bank and I give my cash, and they give me an interest rate for my deposits, which of course is ridiculously low. But the bank takes that and lends it out in good old mortgages and lending, and actually that net interest margin is actually what the money the bank makes. Here, in the stablecoin ecosystem today, I can easily get the treasury rate, you know, so you can dip your stablecoins, you get your 4 or 5%. In many cases, you get higher than that because the crypto platform you're depositing your assets is also lending it out. But imagine that instead of actually depositing your cash in the bank, now that stablecoins are basically cash and cash equivalent, you just hold them in stablecoins and you get paid your yield, the treasury yield. Why would you leave your money into a bank and get the exposure of the bank? Especially that stablecoins are backed one-to-one. Every stablecoin issuer, 100% of the assets are held there. As all of you that work in a bank know, banks operate on a fractional banking ecosystem, where the bank has anywhere from 10 to 20% of your assets at all time, depending on which Basel requirement they follow. Technically, if everybody goes to the bank, wants their money back, the bank is bankrupt, whoever run the banks. On stablecoins, though, it's backed 100% from cash or cash equivalents. So as a consumer, if the stablecoin issuers are regulated, why wouldn't you keep your assets in stablecoin if you can get paid a yield? And this is why the government banned the stablecoin issuers to pay a yield to users. Otherwise, people will take their money out of the banks and actually keep the stablecoins, get the yield themselves, and this will cause a lot of issues, not only with the banks, their profits will go down because they need to go borrow on the wholesale market, but also it affects the creation of money that happens right now by the banking system. And actually, this is the big thing, especially in countries like the UAE, over the next couple of months, we are probably going to see banks issuing their own stablecoins. The Central Bank of the UAE, the CBOE, passed legislation, and basically we're seeing this around the world in Hong Kong and Singapore, many other places around the world, where the banks say, hey, we see this problem, put this on pause for a couple months, let us launch our own stablecoin, so we can have a role in this game as well. This is similar to, imagine if we're all riding horse carriages and somebody comes up with an engine car. You're like, shit, we should actually start getting into the car business. Otherwise, these cars will completely actually destroy our business of the horseback, of using horse carriages pretty quickly. And this is what may happen in the banking system. So the big question is the impact of stable coins. And by the way, this is very common in Dubai, for example. Stable coins are used commonly on a daily basis. So much of the trade with India, Pakistan now happens fully on stable coins. Nobody wants to talk too much about it, but it's the reality. And actually, this is actually where these things are really having a massive impact on the future of finance and actually the future of money. Another big point that's driving this is the entry of institutional players. When I started getting active in crypto, my nickname was Suit Henri. At the time I used to be a banker at UBS, I used to go to these crypto meetups after work. I used to wear a suit and a tie. I was not only the only guy wearing a suit, I was the only guy wearing pants at those meetings. And now we're seeing the industry change radically in how it operates. One thing, for example, I can tell you is very clear in crypto. As the era of those kids running the show has come to an end. The industry now is being increasingly driven by regulated players, by the traditional financial institutions that you know. And like many of you that are in the financial advisory business, in private banking or financial services, many of these firms are entering the crypto space, not because they suddenly loved Bitcoin, but for very practical reasons. One, it's new revenue opportunities. Now, unlike before, is that you can actually make a lot of money pushing crypto to your clients. If you're a private banker now, you can promote your ETFs and actually keep it as your AUM. And in many cases, the margins are still quite high and customers want to hear about it. But there's also demand from existing clients. In the UAE, for example, for those of you working in private banking in the room, a report just came out last week, something that I've been seeing with my own eyes with my hedge fund. In my hedge fund, most of my investors now are high net worth individuals or family offices. They would often tell me, Henry, it's ironic that my private banker, when I ask them about crypto products, they tell me, it's too risky, don't talk about this, market volatility, money laundering, stay away from it. Because they're not able to make money with it. And they put me into all the stupid funds that they are with all the kickbacks and the fees that are paid, they're layered on top. But now, the report came out last week from Avaloq that showed that 68% of high net worths in the UAE have crypto exposure. But only 20% of them have discussed it with their traditional financial advisor. The scary part for many of you in the room, though, this report is public, you can see it up, 58% of them are thinking of switching financial advisors because their financial advisors are not able to talk to them about digital assets. I see it a lot in my personal experience, professional experience with the next gen. Yeah, the 70-year-old dad who's there, who's made his money in real estate, he doesn't probably care about this. But with the big wealth transfer happening now with the next gen, they're really into this. And not talking about it and saying, nah, that's money laundering. Basically, you lose a lot of confidence with these clients. And the UAE, for me, is the place that this is it's the most obvious because there's so much usage of digital assets by the family offices in the region. And what you're seeing as well here is obviously the increased regulatory clarity. The one thing the crypto industry has been asking for many years is regulatory clarity. We just want a level playing field that we can all operate by and build our businesses on. And now it's been the case. A good example, for example, has been even the UAE here. Dubai has built the world's first crypto specialized regulator, VARA, the Virtual Assets Regulatory Authority. Today, there's a waiting list of 850 companies waiting to get licensed. As I mentioned at the beginning, all the big companies globally, Binance, Bybit, Deribit, all of them, OKX, they're all literally regulated or headquartered now here. As a crypto hedge fund, for example, I have weekly reporting to VARA, weekly. I have monthly financial reporting to VARA. My application had 108 appendices. I've done regulatory application for most of my career as a lawyer. I can tell you without any doubt, the rules here in Dubai are the most stringent that we have around the world. So when people tell you, the crypto industry is trying to avoid rules, they just want to stay in the gray area, that could not be further from the truth. And what you're seeing as well, every single financial institution now is going to this buy, build, or partner dilemma. Any of you that is involved in the technology side of the bank, for example, this is a big dilemma going on everywhere. I give a lot of presentations like this to people in finance. where I spend a lot of my time, I give a lot of confidential briefing to boards and CEOs who don't want to be seen in front of their staff saying that they don't know. And I can tell you every single bank, most of them actually, it's actually confidential projects that the staff is not aware of. They have strategic projects now on how we're going to get involved in crypto. Because they know that if they don't get involved in crypto, at the next shareholder meeting, it's going to come up, or this may affect the future of the business. And this is actually very important because historically, people would say, it's all money laundering. It's all used by criminals. Let me give you another piece of advice. I told you first, don't use Bitcoin if you're a criminal. If you want to do something illegal, do not use crypto. The best way to still launder money is gold, real estate, traditional trust companies, and the old mechanisms that we all know. Art, very good one, actually. In crypto, if you look at it last year, in absolute terms, it was $40 billion of assets had touched illicit wallets. To put that in context, according to the UN and the World Bank, there was from 800 billion to 2 trillion that was laundered by the traditional financial system. That's between 2 to 5% of global GDP being laundered by the rails that we know. In crypto, it was actually 0.14% of crypto transactions were linked to illicit wallets. And this is because it's very traceable. As was mentioned in my introduction, I'm the co-founder, I chair the board of the world's biggest crypto compliance services firm. We're the back end of many crypto companies. We serve regulators. A lot of the banks actually get in crypto. We do the managed services for transaction monitoring, KYC, and services. I can tell you the level of compliance that is in transparency in crypto is way higher than traditional banking. And this is why this stigma that existed before, that it's all used by money laundering, cannot be further from the truth. And also what's happening is we're seeing the rise of tokenization, what we call now real-world assets. Where, let's say, I personally want to get exposure to Dubai real estate. I cannot come and myself buy this building. I don't have the money for it. But maybe I can buy 1/10,000th of it, a fractional ownership. Think about REITs that we have in the traditional world, but in a way that I could create a literally tokenized asset of this building if I own it. I don't have exposure to the entire value of the building, but maybe I have exposure to 1/10,000th of it. And this really gives rise to actually fractional ownership. And this is really ticking off. Companies like Damac have launched companies that are called Pripco that are doing this now for Dubai real estate. And also we're seeing it, ironically, in a lot of treasury products. Now you have a couple $2 billion of US treasuries actually that are being put on chain. This is being used now as collateral on various crypto platforms. The world's biggest crypto exchange, Binance, just announced 2 days ago that they're accepting BUIDL, which is basically a tokenized treasury, as collateral on its platform. And this has been actually quite incredible when you see the growth of this that's taken place. But also, what's really happening is that these crypto exchanges now are starting to give you not only exposure to crypto, but also to stocks. You can go now on platforms like Kraken and others and trade US stocks 24/7. How is a traditional bank going to compete with that? And as we're going to see over the next couple of years, the idea that markets are closed on Friday at 5 p.m., everything is closed, is going to completely disappear. And because now we have the mechanism, we have the backbone that allows crypto trading to happen on a 24/7 perspective, basically using digital assets. But also, there's been another wave of crypto IPOs that have been happening from Circle and others that is continuing. But the important point, even if you think about this, if I was to bet who will be the biggest financial institution in the next 10 to 20 years, I'm ready to bet that it's not the traditional firms that we have today. It probably could be one of the crypto firms that is also involved in banking. Today in the US, all the big crypto firms, Coinbase, Crypto.com, Anchorage, have either received or have applied for the bank charter license. If you're 20 years old right now, you're using Robinhood in the US, you're using Cash App, or using one of the crypto exchanges, why would you go open an account with Emirates NDB or Emirates Islamic Bank or Abu Dhabi First Bank? When you have actually a platform that caters for you as UX, UI is amazing, and also gives you exposure not only to the global stocks, but also better yield on your deposits than what your legacy bank is giving to you. And this is something that we are seeing on a day-to-day basis. And there's other things that have been happening. Digital asset treasuries, for example, that are listed stocks that buy a lot of these tokens. But what the big question is, as institutional players are entering the space, what will be the impact on the traditional banks that we have in the system? Which brings up to my last point, the really future of finance, decentralized finance. Today, when we are buying and selling crypto, let's say on Kraken or Coinbase, you're still using centralized platforms to do these financial transactions. They just happen to be centralized crypto platforms. But this is why DeFi comes in. DeFi is the use of financial services, but without any intermediaries. So instead of me using a centralized platform like a Binance or a Kraken, I'm only using smart contract code. There's no humans, there's no bankers who wear nice suits bring you up to lunch. All you need to trust is code and smart contracts. And you say, come on, what is this stupidity? How big can this thing even be? Well, if we go back to my COVID example, at the beginning of COVID, there was less than $1 billion in DeFi. And now DeFi, 5 years later, has over $150 billion. But you say, come on, what is this thing? Why are people even using smart contract code? I'm sure my clients will come and talk to me as a human being. Well, there's a couple of things. First of all, DeFi is permissionless and what we call composability. Today in the room, for example, if you love your Emirates NDB app and you love your PayPal app, they're great. But they're two private companies. They're never going to share their IP with others. In DeFi, everything is open source. In this room today, we can take two DeFi applications that we like, we can mix and match them together and come up with a new DeFi application. It's open source, and that we call financial Lego, composability. Is you can take anything you want and put it together. Really accelerates innovation in the financial services space. But also is the fact that it's permissionless. Today, if you go to a private bank, they look at how much money you have, how much money you make, how much money we can make out of you, but also where you're born. For me, I find it shocking. And I've decided that one day when I get settled on my businesses to dedicate my life to this. I find the biggest discrimination in life today is where you're born. The biggest impact on what financial services you can access is the one thing you have no control in your life. It's where you're born, and has a massive impact on whatever finance you can access for the rest of your life. If you're unlucky enough to be born in Iran, Syria, Lebanon, North Korea, pretty much all of Africa, that's it, sorry. We cannot deal with you. The person born in Libya now, or born in the last 40 years in Iran, they didn't choose their government, didn't want to be in there, but now they're completely cut off of the entire financial system. The beauty of DeFi doesn't care about this. All it cares is actually what financial services you want to access. You'll say, no, but we still have risk, and we're still doing, by the way, there's KYC, you can do risk management on it, but using the latest technology, not based on something stupid as where you're born. By the way, I'm still shocked on passports. We have the place of birth. What does it even change? What does it even matter? And I'm convinced in 50, 100 years from now, we're going to look back at the era now. In the same way that we look at women's rights, that we're going to let women vote back in the day, or slavery, and say, man, I can't believe we should discriminate on where you were born, the one thing on which you have no control on. And we're witnessing this every day in financial services. But you'll say, come on, what services are admissible by this? Quite a few, actually. You can do a lot of your trading, buying and selling crypto using decentralized exchanges. Borrowing and lending. You put your crypto, you're able to borrow, let's say your Bitcoin, you're able to borrow stable coins on the back of it, for example. Massive, hundreds of billions of dollars are operating like that today. Even insurance asset management. You may think, people want to come to get your wisdom on which fund to invest in. You can do this in crypto, fully automated, by the way, a fraction of the fees the asset managers charge here, and everything is done on-chain. All of these services are offered. There's no company here. It's all smart contract code. That's it. You'll say, come on, how big is this thing? Even on exchanges. Now, on an average month, It's 5 to 15% of global trading volume happens on decentralized exchanges, even when it comes to crypto trading alone. And this really shows you how things are happening. Even central banks are realizing now this is actually a pretty big change. Central banks now are starting to experiment with DeFi alone to see how they can actually move money around the world using a purely smart contract rails. But also this brings up a lot of new questions. If we're having financial services delivered by smart contract code, then can it be regulated? How should it be regulated? How do you regulate code? There's no company, there's no office space. How do you regulate this? Is it even a legal person? For example, what's the legal status? Can you sanction a wallet, a public wallet? The US Supreme Court said actually no recently. What is it? So this brings up a lot of new questions. In the same way that 400 years ago in the UK, people came together and said, hey, beforehand, if you had a company, you go and bankrupt, you're screwed for life. They came up with a concept of a limited liability company or moral person, where the company can operate, there's directors, but if the company has its own liabilities, goes bankrupt, you close down that company, and as a director or a shareholder, you can go do other stuff. That was a novel question back in the day. That changed entrepreneurship, that changed business. Are we going to have the same thing here in DeFi? For example, there's tax challenges. For example, how do you tax DeFi? How do you report DeFi? How are the regulators going to, tax authorities going to deal with this around the world? But also there's other issues. For example, the metaverse. This was very popular a year ago, where people were buying land in the online metaverses, ecosystems. What if I have land in the metaverse and I'm lending it out to you? How do I pay taxes on my digital land in an online metaverse? But these are real questions that are coming up. Even think about even criminal matters. A big problem we have right now is like, what if my avatar sexually harasses your avatar? Where do you go? You go to the police station and say, hey, avatar X harassed my avatar? How do you deal with this? But these are real issues we're having today. You know, so these are actually, all these novel questions are coming up on it. And there's much more. But I want to leave you with is really, we've had all this evolution in the early days. These are big changes happening right now that are changing the future of finance. Finance, as we know it now, is going through a massive transformation. This year, 2025, is without any doubt a historical year in the history of money and the history of finance. For sure, our children and grandchildren, they're going to look back at this era of the Genius Act, of the rise of Bitcoin, countries adopting Bitcoin, how banks are offering now digital assets, the first Bitcoin ETF, how countries now are looking at this as a game changer period in the history of money. And again, think about how we started, where we had cattle, salt, and animals, and we went to different eras of what we saw as being basically a store of value. Are we going to have digital assets? Maybe, maybe not. But you may say, come on, this is a bit of a joke. Is Bitcoin the new digital gold? Nah, come on, this is a joke. Nobody's going to do this. You know, I've given this presentation for decades. I've trained many central banks around the world. I'm the main trainer at the DFSA here, the regulator. I trained VARA, the regulator here. I've done this speech around the world for the last decades. I often tell, people that I meet, let's call them not older, but let's say more experienced. They're like, come on, Henri, this is a bit stupid. Bitcoin digital gold is not going to happen. The one advice I often tell them is go ask the youngest member of your family. This weekend, if having lunch with your kids, your grandchildren, your nephews, ask them what they think about Bitcoin or digital assets. You may be surprised. I teach the world's first crypto university course in 2015. When I start my class, I always ask my students, what is the most valuable asset that you have? You know often what their answer is? Video game skins. In Call of Duty, in Roblox, Minecraft, they have assets. They have skins, weapons, whatever. In many cases, that is the most valuable asset they have. Does Julius Baer recognize that as an asset, as a source of fund? Of course not. But this is actually something that is happening very quickly. And the other thing is also, we should be also aware of how the mindsets are changing. Especially all these gurus that we used to follow in the financial world. For example, Warren Buffett.
Different way of looking at it.
I'll show you something.
Well, in my life, I try and avoid things that are stupid and evil and make me look bad in comparison to somebody else. And Bitcoin does all three. And in the first place, it's stupid because it's very likely to go to zero. The second place is evil because it undermines the Federal Reserve System and the national currency system, which we desperately need to maintain its integrity and government control and so on. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China. With all of our presumed advantages of civilization, we are a lot dumber than the communist leader in China.
So you see here the generational impact. A lot of people we saw in the old system are actually not embracing it. The interesting fact I was mentioning, asking your kids, your grandchildren, today the majority of crypto users around the world are under the age of 34. It's an incredible generation shift. This is why the private banks, it's not coming from the clients, it's coming from the next gen. And also in emerging markets. If you go to Geneva now, you tell people about this, they'll be, we don't really need it. But what you can see is really in emerging markets where you are seeing the adoption of digital assets. Countries even in the region, India, Pakistan, pretty much entire Middle East, are some of the biggest users of digital assets. And this is why I'll just leave you with this last video. That's often one, we think about events like these. We think about presentations like this. And I'm convinced in 20 years we're going to look back, or 5 years we're going to look back at this presentation and say, I remember that guy with gray hair and came talk to us about Bitcoin, you know. It was a bit funky, you know. But what we often take for now as granted has changed over the years. A good example is how we used to perceive the internet not so long ago.
But you know, I think about this, and what about this internet thing? Do you know anything about that?
Sure.
What the hell is that exactly?
Well, it's become a place where people are publishing information.
Right.
So everybody can have their own homepage, companies are there, the latest information. It's wild what's going on. You can send electronic mail to people. It is the big new thing.
Yeah, but you know, it's easy to criticize something you don't fully understand, which is my position here.
Go ahead.
But I can remember a couple of months ago, there was like a big breakthrough announcement that on the internet or on some computer. Yeah, I just don't know. What can you, just knowing me the little you know me now, what am I missing here? What do I need?
Well, if you want to learn about the latest cigars or auto racing statistics.
Well, you know, I've got that covered. I subscribe to 2 British magazines devoted entirely to motorsports, and I call the Quaker State Speed Line about 2 times a half hour. So now with the computer.
So you can see a lot of the benefits. Actually, now we laugh at videos like these, but actually that's what we had on the place. Guys, that's all the time. I think we have time for a question if you're interested. Thank you for letting me share our passion of future and money with you all. As I mentioned, there's a gift for each one of you afterwards, a copy of my last book that came out. It's become #1 new release, actually. Very proud of it, another bestseller. There's a personalized copy for each one of you. I'll let the guys actually handle it. It's all written for each one of you. Also, the other thing, by the way, if you're interested for your kids, I've even published now recently a book for kids, a crypto book. Very proud to say it's been the #1 book on kids and money globally, where we actually try to teach the kids in an easier way, in a comic book format, how it works. With characters and everything, and the book is available here as well if you guys are interested on that side to teach kids. One thing I leave you guys all with is I'm a big believer. If you may love Bitcoin, you may hate it, you may agree with digital assets, you may not, but I think all of us, we have at least this intellectual and probably fiduciary duty, many of us, to at least try to understand it. And really and at least be able to actually see how it is and actually be able to deal with it. And then at least you can make your own decision. But at least understanding this technology of the future, I think is the first step for many of that. Guys, thank you very much. It was a pleasure being with you all this morning. Thank you very much.
And the best way to learn, actually, maybe what to start, often I get asked, what's the best way to learn about this, right? Of course, there's a lot of videos online right now on this link on the YouTube page. I have a show now here on CNBC Arabia every week. 60 million people watch the show every week. It's on TV a couple times a week. And then it's on my YouTube and all the channels. But really what I recommend to everybody is really to at least experiment with it, right? For example, instead of buying the next gift or Valentine's Day or whatever, office party, whatever you're doing, instead of buying a stupid gift that's going to be thrown to the garbage a couple of weeks later, why don't you buy a fraction of a crypto? Dubai is the best place probably in the world to buy digital assets. You have a number of regulated platforms here. They're regulated by VARA. You can wire AED from your bank account. Test it. Experiment with it. But buy 50 dirham of it. Just check what it is, how it goes. And then when you start using it, you'll realize the power of it and how powerful this can be actually as you're using it basically for day-to-day services and everything else. So that's often the best way to do it. For many years, by the way, when I used to go to weddings, for example, I used to give as a gift some Bitcoin. That's obviously gone quite a lot in value, but it's also the very good conversation that started as well that makes it fun and exciting compared to traditional gifts.
Missed that opportunity, I think.
No, by the way.
To get that gift.
Yeah, but it's still a very, people often ask me, is Bitcoin too expensive and this and that. I really cannot emphasize enough, we're still at the very, very, very early stages of it. I really genuinely believe, going to look back at this era now and say, man, I can't believe Bitcoin was like $100,000, And by the way, you can buy a fraction of a Bitcoin, right? Bitcoin goes to 8 decimals. So you can buy up to the 8th decimal, basically, of a Bitcoin, which we call Satoshi, by the way, the lowest unit of it. But really, we're going to look back at this era. If you think about it now, BlackRock, where you saw our thing, their recommendation is to have 2% of a portfolio in digital assets. Morgan Stanley's now recommendation is anywhere from 2 to 5%. UBS just finally changed its stance and said, hey, maybe as part of a diversified portfolio, you should have a core position in Bitcoin, And so we're really seeing this shift happen around the world. Now the US is changing its stance with the 401ks. This is a $12 trillion industry. Now Bitcoin digital assets are becoming allowed to actually people be able to put this inside of their portfolio. I'm convinced. Now actually in the UAE it's very interesting because all the private banks or asset managers don't have right now crypto products on their platform. Some of them, I'm sure many of you guys work, now you're able on a reverse inquiry basis to sell the Bitcoin ETF. And now over the next year or two, I expect to see more and more funds come on the platform actually. So actually the funds can be offered to the customers. But this is a matter of time, especially in this market. As I mentioned, the latest report that came out, we're going to see, I think, a very systemic shift in the space where those firms are, stick to the old school approaches, at least not offering it, will be penalized, unfortunately, by their clients and customers, especially younger ones.
Thank you, Mr. Henri. But before that, there's a couple of questions, I think.
Hi. Thank you for the very interesting session. Thank you for the very interesting session.
Yep.
I really like the slide that you showed about how it changed from Spain to Dutch to France to England. And I think it is one reason was because of the financial innovations that happened in between.
Yep, correct.
And in most cases, the incumbent was unable to, adapt, efficiently to the change. So do you think that because now the incumbent is the United States,
correct.
So do you think that in the next transition, it might not be the US that might be the ultimate winner of this transition, even though they are pioneering most of the things?
Correct. Very good question. And there's a lot of research that is done on this, from Ray Dalio on the public side to a lot of academics write about it as well. For sure, there will be a regime change. It happens if you believe that history rhymes. It doesn't need to repeat itself. If you believe that history rhymes, every 100 years or so, it changes. For example, back in the day, when it went from the Dutch to the British, from the Dutch Gilder, it was innovation. At a time, there was the Industrial Revolution, or new technologies came in, or at a time, Europeans discovered a new world. There's always these innovations that come up. Now it's becoming AI and crypto. 100 years ago, it was something else. Normally, a couple of things happen. As these countries evolve, there's a lot of debt that take on board, and becomes unsustainable, right? And normally the empire that is on top needs to have a big military, because if you don't obey, they can come and attack you, but that needs to actually fund itself is by the issuance of debt. And this is something you see over and over across history. You can go back, by the way, not only the Dutch, the French, and the Brits, if you go even down in history, because of what I do, I spend a lot of time in the space where you even go to history. There's been debasement of silver, gold coins. The Romans used to do this, the Greeks have done it, everybody has done it. Because when you come to a situation, you borrow a lot of money, you have two choices. One is you're going to default, or you're going to print more money. 100% of the time, they print more money, 100%. Like, no politician is stupid enough to default when he can print more money. And that actually affects, as you guys know, the purchasing power of people. Unfortunately, it negatively impacts the average everyday worker. Those who own land, own real estate, own gold, own Bitcoin, they'll be fine. But it affects that majority. You guys know in the US, only 21% of people own stocks. You know, the fact that I found the most shocking is almost half of the US population does not have $400 in their account. It's crazy. Right? Those are the people that will pay the price. Your tomato is, you know, you don't realize this goes from $5 to $5.50, but there's just the purchasing power goes down. So normally there's been always these shifts that happen. There's two things that happen normally. There's actually either a war that happens between the incumbent and the newcomer. Now, whether there'll be war between the US and China or other countries, as we can see. Normally there's capital controls that come into place though. Normally the country that is losing this power will put capital controls to try to block the flow out of money. But normally what wins in these cases are gold over the years, and what I believe is the new digital gold, which is Bitcoin. Because there's a lot of benefits, by the way, between gold and Bitcoin, right? If you think about it, the reason we all buy gold, there's a finite number of gold in the world. We discover 2 to 3% new every year, but let's assume we don't discover its finite number. Gold, you can have a bar of gold, you can have the kilo bar, you can have the little bar, you can have jewelry, you can have a wedding ring, right? So it's divisible. And it doesn't go bad, as we know. Same thing with Bitcoin, right? Bitcoin is a finite number, there's 21 million Bitcoin ever, that's it. In practice, there's about 15 to 16 million. A lot of the first couple million Bitcoin are lost forever. We're never going to have them back. At the early days, there's always the analogy of the Bitcoin pizza, where they were paying 10,000 Bitcoin for a pizza. That's $1 billion pizza now. You know? And that poor guy did it over the summer, over and over, paying 10,000 Bitcoin for a pizza in 2010. That's only 15 years ago. Okay? So at a time, it was so many of these Bitcoins are lost forever. And then you have the same thing, as the same way gold is divisible, same as with Bitcoin. You can have up to 8 decimals of a Bitcoin. I really believe that we're about 2 or 3 years away that we're not going to talk in Bitcoin terms. We're going to talk in Satoshi terms. Basically, how many decimals you're using. Already, a lot of the tech platforms now have switched to decimals already for Bitcoin. They show in the number of Satoshis you're using. And turn Bitcoin doesn't go bad. But now the biggest benefit with Bitcoin is that I can move it around. If you want to move a bar of gold from here to Geneva, good luck. There's the fees, the transport fees. Getting it there is a whole problem, as you guys know. With Bitcoin, you can move it like this easily. There's a downside of Bitcoin, by the way. As you all know, about 30 to 45% of the world's gold is actually used for jewelry. There's no Bitcoin jewelry yet. It's pretty much impossible. So Bitcoin still has gold has still use of jewelry, but the majority, as you all know, is held by central banks around the world in the same way. So yes, Bitcoin, the advantage is you can move it around the world quickly. The downside is you cannot wear it as jewelry. I would argue in the digital era that we're moving on, where I'm able literally to send files of information around the world instantaneously for free, the fact that I'm not able to send money for free instantaneously right now is crazy. And this is what Bitcoin does. It allows you in this Web3 ecosystem that we're moving in, allows you to also move value around. And that's the true innovation that Bitcoin brings and digital assets bring to society and the world. Yeah.
What I've noticed is that in the last couple of years,
yep.
or quarters, a lot of the big Bitcoin miners like Kobe or ABS, they are moving to AI, data centers, those kind of stuff. So, are you concerned about, is it because of halving of this crypto Bitcoin, or are they seeing more opportunities in the AI?
Yeah, very, very good question. So the question to make sure we understand is, a lot of the Bitcoin miners, those who are throwing the dice, in the last couple of years have been pivoting to AI. So what's the impact of that? First of all, I think it's important to understand that Bitcoin mining has evolved a lot. In the early days, you could mine on your laptop. Now, it's pretty much, it's massive companies doing it. There's listed companies who are buying the latest machines that are able to do it. A couple of things. A lot of these Bitcoin miners are now also getting into AI for the very simple reason the Bitcoin mining, you have three cost input. One is the cost of electricity. Number one cost input. This is why Bitcoin mining always takes place where there's cheap electricity. That's why Pakistan is trying to mine Bitcoin. China has the Three Gorges Dam. You know, in the wet season, that's where they used to mine Bitcoin. And then in the dry season, they go in the northeast where they use coal actually. Now, what happened is prior to 2021, 75% of the world's Bitcoin was mined in China because they have a surplus of electricity. China banned it. It all moved to the US, ironically. It's mainly now in Texas and a lot of the northeast is where the Bitcoin is mined. China now mines about 25% because like many places around the world, the provinces don't follow the central government. They need to make GDP. So there's a lot of Bitcoin mining. So Bitcoin mining has become you need cheap electricity. Then it's the cost of your machines. They're all made in China. They're all Taiwanese or Chinese machines. And then the cost of the infrastructure, the data center you're renting and everything. A lot of these same inputs apply for AI. It's a different kind of data center that you need. It's a different kind of category. But I expect that a lot of the Bitcoin miners will also get involved into AI. Is that going to impact Bitcoin mining? Not really, because the hash rate of Bitcoin, which is the number of times you're throwing that figurative dice, is extremely, extremely high. The Bitcoin network now is extremely secure. It's very difficult to beat that if you want. So I don't expect that to really have a material impact. I think the biggest competitor to privately owned or publicly listed Bitcoin miners are ironically countries, state nations. When Bhutan is mining Bitcoin, when El Salvador is mining Bitcoin with the volcanoes that they have, it's basically the heat of the volcanoes. Bhutan using hydro, Pakistan using hydro, China using hydro. When a country is mining Bitcoin, it's very difficult for a private company to compete with that. And I think that's the biggest risk I see when it comes to Bitcoin miners is how are they going to compete with state nations that are getting into the business. Imagine if in your business, countries are getting involved in it, you cannot compete. I think that's the one risk I see with Bitcoin mining. But I think it's going to continue for a foreseeable future. There's interviews, by the way, if you're interested in the Middle East, on my CNBC show, it's on my YouTube page, where I'm the first person actually was granted access to the biggest Bitcoin mining center in the Middle East. It's literally in Abu Dhabi. It's very impressive. We have technology now in the UAE. It's a group called Phoenix Group, which is a listed company on the ADX. And they have cooling systems. So in the middle of the summer in Abu Dhabi, Bitcoin mining takes place. The machines, they generate a lot of heat, but there's a whole water system, cooling system that is in place to cool down those machines. It's very, very impressive, actually. You can see the interview. It's on my YouTube page now. Thank you very much for your question.
Hi, Henri. Thank you very much for a very convincing presentation. My question is around the utility. So you said buy Solana.
Yeah.
And now comes a part of utility, right? So the person who is providing some sort of services has to give me, or I have to transfer my Solanas to him.
Yep.
The first question is how far are we when it comes to UAE? Because, say for example, I want to purchase something on Amazon. I can see an option over there. One. Number two is that how would the government charge a VAT, for example, 5% VAT that we pay on every purchase? So how are these things going to be done, and how far are we?
Very, very good question. So let me address a couple of elements. First element is how far are we in day-to-day usage, right? If you look at it today, crypto is mainly being used for trading as a digital gold, and a lot of it is being used for cross-border payments, right? When you're going on Amazon here, let's say I go to the UAE Amazon website to buy my book, for example, actually within the country, the payment systems work pretty well. This is what you realize with crypto, within a country, making actually payments works very well. India with UPI, for example, works very, very well. If you're looking in the UAE, you have real-time payments. So most of the countries around the world, you have real-time payments, actually works pretty well. The problem is even using your credit cards, for example, to pay, you don't feel it directly. There's obviously a fee that is embedded in the merchant and everything. There's a fee that is being paid there. So that is one reality you're having now with digital payments as it happens, right? So within a country, normally the use cases are lower. It's really when it starts doing cross-border that becomes utility, becomes more useful. Now, where are we in the UAE? So for sure, the UAE is one of the most advanced countries when it comes to digital assets. For a couple of things. One is the regulators, like I mentioned. Here, DWTC, VARA, the world's first crypto regulator. DIFC, which I'm on the advisory board of, the FSA just came up with rules as well for funds. ADGM has the first rules on crypto in the world from 2017. RAC and Ras Al Khaimah, that's an initiative called RAC DAO, now it's called Innovation City. They have a whole set of things on DAOs and decentralized autonomous organization. They have a lot of innovative things actually happening there. So it's a very 1 + 1 = 3 relationship across the country. Now, who's using it? A lot of the usage of crypto here is happening on a couple of things. One is OTC transactions. I'm a business person from India. I sell to Malaysia. I'm not going to use the SWIFT system. I'm using stablecoins. So how do I move to fiat? I go to OTC brokers, all regulated, where basically I give them the crypto, they wire AED in my bank account here in my lovely bank. There's also the gray market, right? I call them the crypto babushkas, right? Or if you go in data, there's next to the gold souks, you have all these guys doing OTC, same thing, but basically for crypto, you know? And this is the exact same thing that we have right now with informal networks that we move money. The same thing exists basically with crypto, where they're using it basically to get money around the world from that perspective. Now, how is it going to evolve? I think from the tax perspective, the governments love it because think about today, if I do a cash transaction, I go buy my tea and I pay in cash, it's very difficult to trace it, right? In UAE, we're anyways on cashless payments anyway, so those VATs are easily collectible. I am a firm believer in the next decade, cash will be banned most of the world. Cash will be made illegal. Because if you're a government, you don't want people to use cash because you're not able to levy tax and there's all the things that we know around there. The big thing to watch is what happens with central bank digital currencies. There's the stable coins that are issued by private companies. Of course, central banks are not idiots. You know, if today you're a central banker and you love Bitcoin, I mean, you're crazy. This is a bit like back in the day in London, the black cabs loving Uber. I mean, you'll be an idiot to do so. But central bankers are not stupid. Central banks have realized today, maybe we don't like Bitcoin. We don't like a money that is decentralized on which we have no control on. But we like a lot of the features of Bitcoin. The fact that it's traceable. The fact that I can see all the economic activity happening at all times. And this is why over 90% of central banks today are in advanced stages of research on CBDC, Central Bank Digital Currency, which is a digital currency that is issued by the central bank. I've done a lot of work with the BIS on this. I was very fortunate to work on the first cases of CBDC in Hong Kong back in the day. The UAE is very advanced here on CBDC as well, by the way. And so is, for example, India. RBI is very advanced on this with SEBI as well is very involved on this topic of CBDC. Why do governments love central bank digital currency? One is right now, if you ask the economists at any country, they look at GDP numbers always a month back or a quarter back because it's very difficult to get live data. If we're all using central bank digital currency, I can tell you now live how much people are spending in DWTC on coffee. You have live granular data that you can slice and dice. That's a dream of economists or policymaker. That is possible with a CBDC. Second, it de facto puts an end to tax evasion and de facto puts an end to corruption. Because if everything is on digital currencies issued by the government, the VAT is paid automatically. And second, becomes corruption almost impossible. The idea that I'm going to come and give you an envelope full of cash with a CBDC becomes impossible because if I give you a CBDC $1 million, you get traced in 2 seconds. There's always going to be corruption. People will give nice watches, put those kids into a school. The old school ways of corruption and favors or whatever are always going to exist. But at least with corruption with money becomes very much impossible. And then there's also the concept of programmable money. For example, imagine think about COVID. Imagine now, I want to encourage the economy in the DWTC. And I say, I'm giving you all 200 dirhams, but you need to spend it in the next week in the DWTC. If you don't use it, it disappears. They can make money programmable. That is, the technology is available, by the way. It's just fully ready. So as a policy-making tool, that is very, very, very powerful. This is why a lot of governments are working on central bank digital currencies. The problem now, we have a couple of countries that have adopted this. It's often small countries like Bahamas and others. The big one is China. China has over 1 billion users now of what they call the yuan, the digital renminbi. 1 billion. To be fair, people don't have much choice. I mean, it is what it is. You got to use it, right? But what's incredible is a lot of countries like the UAE are very advanced on CBDC. India, very advanced on CBDC. And what I think we're going to have, but if you look at the other extreme, the US, you know, they passed the Genius Act, everything that I showed earlier. They passed a law banning CBDC. Because it's a very American thing not to have the government see what you're doing. That's the reason there's Amendment 2 guns and all kind of stuff. So I think it's pretty much impossible this is going to happen in the US. Europe is very interesting. Europe, right now, if you can look at the survey of the ECB in Frankfurt, the European Central Bank, the data shows that the average European cares more about privacy than convenience. And by the way, for some reason, the Germans, it's off the charts. If you ask the average European if they're happy to sacrifice a bit of privacy to get more convenience, to be able to send money around easily, they're like, no way. But this is what policy comes into place. The ECB is not stupid either. The Europeans are very smart. Right now, 99% of stable coins are on US dollars. It's actually 99.9%. So think about it. Every day, as there's more stable coins, there's more demand for US debt, and there's more suckers around the world who are buying US debt indirectly. The Europeans are not stupid. They're like, whoa, if we want the euro to play a role, we have to create our own version of digital euro. 3 days ago, came and said, we are going to test our digital euro in 2027 and have it launched in 2029. There's two problems there. One, in the crypto world, 2029 is in 4 years from now. God knows where the world will be. But this is Europe with its own problems, is not able to move faster. It is what it is. Second is, it's not because you're digitalizing the euro that automatically it's going to create more demand for euros, as we know it right now, right? So that's a big problem they're having right now on the euro side. What I think is very likely to happen is you're going to have countries like Europe and US where CBDCs will not exist or will be banned. And you're going to have a whole chunk of the world, from the Middle East, India, Pakistan, the entire Asia, China, that will operate on a CBDC. And I think we may have a new Cold War of CBDC and non-CBDC countries, and this will happen in the next 5 years. So it's going to be very interesting. The other battle we're going to have is on stable coins. China made it very, very clear, the PBOC, the Chinese Central Bank, they are working now on the renminbi stablecoin. Again, if you're China, you want to counterbalance the dominance of the US dollar, especially as we're having de-dollarization going on. They realize within the country they're not going to liberalize the renminbi, otherwise there's capital controls in China like many other countries in the region. So what they're doing there is they're looking at the offshore renminbi in a stablecoin format. If you think about One Belt, One Road, One Belt, One Road has over 65 countries, it's 4 billion people, it's 40% of global population and trading going on using the One Belt, One Road network. There's a lot of countries in One Belt, One Road that will be very happy to use the renminbi in a stable coin format than using dollars. And if I was a betting man, that's what China probably is going to do, is have its renminbi, its stable coin, and they're going to push that across One Belt, One Road. And we're going to have very important geopolitical considerations between US and Europe and the rest of the world, especially the BRICS countries, who are probably going to embrace these stable coins and embrace central bank digital currencies. In the early days of crypto, I used to sell my students or in speeches like these, it was very technical. In the early days of crypto, we used to read technical white papers. Now, reading The Economist is as important as reading those technical white papers, because geopolitics is having a very significant role in the future of money because of the impact it has on that perspective.
Good morning, and it was quite a very interesting session. I just want to take the previous question to the next level. How can we become a provider? Like, I'm asking from point of view where I run an IT company here, and it's a digital engineering firm. We source cybersecurity also.
Yeah.
Recently, I've been getting a couple of inquiries from compliance Vara, and there are many companies, small companies, they do Bitcoin, they do blockchain, but they don't know where to sell.
Yeah.
So how do we identify if I have to get into this Web3 service provider?
Yeah.
Or how do I find the right paymasters and like convert it to a business level?
Yeah, very good question. So on this is a question I get quite a bit because what's happening is exactly your situation where there's a lot of entrepreneurs and business owners in the room, and now you're getting these inquiries on crypto. You're like, shit, what do I do with this? Like, is it worth for me to look into it? If you're a banker, do you offer services? If I'm a firm, I go into it. First of all, we're at the right place. I mean, actually here, next door, One Central, there's no more space because it's all crypto companies now. The rents have gone up. My rent only went up 18% as a favor because I was the first crypto company here. Average rents went up 35, 40% because it's all crypto companies coming here. All these firms need services. I was mentioning, I'm the chairman of the board of the world's biggest crypto compliance services firm, and that's what they do. They do managed services for crypto companies on the compliance side, on the transaction monitoring, KYC, and so on and so forth. For a lot of businesses, there's tons of opportunities in this space, and this is just going to continue, right? My personal, what I would do if I was in your shoes on this, I would start interacting with crypto, using it, sending payments, transactions, seeing how it works actually on that perspective, and that is often the first step on it. The problem is unfortunately, last couple of years, there were some firms that saw this and have been active in it on the cybersecurity side, smart contract other side, tech provision side, wallets, the payment, the fiat to crypto, crypto to fiat. There's a number of firms now have been focusing on this for the last couple of years. But now there's obviously the ecosystem is growing quite a bit. It's good for me. It's a matter of time. In the next 36 months, all of our firms we will deal in crypto without even knowing we're dealing in crypto. It's like the example when you're buying something on Amazon, the rails behind may happen on stablecoins, but you won't even notice it. It may happen on Ethereum, it may happen on Solana. And the same way, by the way, right now when you're connecting to the internet, you don't care how the back end works. When you're sending money, you don't care. You just want to receive the money. You don't care how the rails it's being used. Crypto is so early that we still talk about Solana, Ethereum, stable coins. It's in a matter of 2-3 years, we're not even going to talk about this. It'll be just use cases that we're seeing on that perspective. Hope that answers the question a bit. But it's difficult because like there's a lot of services in the space. Like everything needs to be done, right? So but it's an industry that's going to continue to grow for sure next couple of years.
Henri, thank you for an impressive session. So my question is that as we are aware that currency loses its value over the time due to monetary policies and printing of new currencies. So when it comes to crypto, we see new cryptocurrencies coming every day. So when new cryptocurrencies come every day and people move from one to another, the same requisition of value of the cryptocurrencies will also rise in the cryptocurrencies, right? So that is one question. Where does the cryptocurrency derive its value?
Yeah, very good question. So where does the value come from of these cryptocurrencies? First of all, to answer the first part of your question, there's a lot of shit coins out there. You know, yeah, there's Bitcoin, Ethereum, Solana, the list goes down. But there's like a couple of years ago, there was only 20, 30,000 crypto. Now there's literally millions. We could in this room create a new coin right now. It'll take us 5 seconds, right? It's very easy to launch a coin. The problem is probably nobody wants to buy it. There's no value, right? The way I look at it is obviously Bitcoin is by far the most dominant. Then you have Ethereum, that is by far the biggest dominant layer 1. Then it goes down from, there's BNB, Solana, and the list goes down and down. Unfortunately, a lot of people have their first interactions with these stupid shit coins. You know, if something you see like a stupid thing that you're coming up and there's value and stuff, these are very thinly traded. A lot of them are scams. I can tell what I tell everybody is what I do personally, outside of my money in our fund. I'm 90% Bitcoin, I'm 5% Ethereum, 5% Solana, and maybe a bit of like other stuff. But it's really Bitcoin and Ethereum, Solana. Like these are, at least Bitcoin will be here for the foreseeable future. Bitcoin is always going to be here, right? Just be very careful with the other shit coins. There's a lot of crap out there. In a way, I find it beautiful because it's financial innovation. Like you could launch your own coin tomorrow, and if people believe there's value, I mean, Trump launched a coin out of nowhere. It's worth $200 million. whether it's a scam or not, that's a different conversation. But I mean, it's really, there's people buy that coin. It has zero intrinsic value, by the way. There's nothing you can do with it, but people buy it. Where does the value creation come from? It really depends on each token. On Bitcoin, it's very similar to gold. It's like offer and demand. If more and more people want it, and the price will go up, as simple as that. As in the same way, where does the value of gold come? Gold doesn't generate yield. Outside of jewelry, there's not much use for it, right? So I think that's going to be, there's a value creation there. When it comes to Bitcoin, that's how you have to look at it. It's like gold, offer and demand. When it comes to the other, what we call layer ones, Ethereum, Solana, and the list goes on and on, it's really the utility. It's a bit, imagine if you're able to buy a stock of the internet. So as more and more people use the internet, you're getting some revenue out of the usage of the internet. That's a simple analogy of where the value creation is happening for Ethereum or Solana or some of these coins actually. It's a usage of the protocol that is generating value from some of these coins. Those are the good ones. By the way, Ethereum, Solana, and others, there's a real value. There's so much garbage. I mean, but it's also important to stay humble. I remember when Dogecoin came out. Dogecoin was created by two engineers. It was an Adobe engineer. As a joke, they put a Shiba Inu dog on it. They launched this coin as a complete joke. What we call the token economics, which is like the monetary policy of the coin, is complete garbage. Every year, I think it's 10 or 20% of new coins come on the market. I mean, there's zero fundamentals of that coin. It's pure garbage. But at the time, it was launched as a joke on Reddit. People would tip each other Dogecoin. It's a bit, imagine I like you as a friend. I'm like, hey, here's like 100 Dogecoin, and you're like, oh, thanks, But that thing became a community. It became, people felt the sense of belonging of the Dogecoin community. The Dogecoin community, believe it or not, I'm not kidding, I'm not making this up, sent the Jamaican bobsled team to the Olympics. They funded the Jamaican bobsled team to go to the Winter Olympics. They started building wells in Africa. And people felt proud of it. That's how Elon Musk got involved. He felt, this was a nerdy group that loved Reddit and they loved Dogecoin. And it blows my mind that coin is worth a couple $2 billion right now. There's zero utility. There's nothing. The economics make zero fundamental sense. But the question is, how do you value a group? Think about it. All of you here in the room. On a regular basis, you get together here. And you hear from speakers and learn about topics. How much is this group worth as a community? Imagine if you had a coin that gave a value to this. If you want to be a member, you have to buy that coin. I'm not maybe giving you ideas now to the group, But I mean, there's intrinsic value of it. It's just very, very interesting. And I think this is why in the space, you always have to be very intellectually honest and open-minded. Think about NFTs. Again, I don't talk, normally I teach a 36-hour class on crypto, right? This is like an hour and a half. I don't have time to go all of these. But NFTs, they're literally, the fact of JPEG, images, digital. If you like this painting, if you like a painting, you physically have it. The NFTs, it's literally the digital representation. We can make 1 million copies of it, but there's only one original one. And if you come to my house, let's say I have a great painting, I can show you off. I can say, oh, look at my great painting. Yeah, it's mine. But with NFTs, I can show off it to the rest of the world. For the rest of eternity, they'll know that Henri owned that NFT. And it's a very human behavior. Think about many parts of the world. They know when people get older, they want to donate to their university or school to put their name on a building, that history will remember me. But that is, imagine if I put my name on this room, everybody in the room will see my name. But that's it. It's limited physically to where it is. But imagine I am buy an NFT. For the rest of humanity, as long as we exist, people will know that Henri bought that NFT. So it's very interesting the human psychology comes around these, For a long time in crypto, people were buying these, what they call the crypto punks. There was something called the Bored Ape Yacht Club. These are literally images of monkeys. Like, I'm not making this up. People were paying, we're talking hundreds of thousands of dollars for these images. But then, you had the right to own it. I have a friend, he set up a wine business with a picture of his Bored Ape on it. Others were making t-shirts where they're wearing their Bored Ape. There was like private parties where if you could show your own Bored Ape, you're part of the club. So there's all these new ways of monetizing value that is coming up that is becoming very, very interesting. The best example I give is social media. So I have been creating educational content on crypto on a daily basis since 2016. Daily basis. This is before TikTok even existed. I don't know how many thousands of videos on LinkedIn. My show on LinkedIn, I have a 60-second summary of the crypto developments that happened on the crypto space. I just recorded yesterday. It's being aired on Monday on my LinkedIn profile. Is the #1 finance show in the world on LinkedIn. My TV show, 60 million people. On YouTube, I have tons of content. The day LinkedIn doesn't like me, they cut me off. The day YouTube doesn't like me, they cut me off. I mean, if you think about it, even Donald Trump was banned from all the social media platforms. If it can happen to US president, it can happen to anybody. Right? But what I mean is that now, when you go on YouTube, you're being pitched ads. Right? I'm convinced in the next couple of years, each one of you will be able to monetize your time. Let's say if I decide to watch a YouTube video, why am I not getting paid for my attention that I'm spending on that video? This is going to happen. And then why am I not able to sell my data? For example, I do a lot of sports, I work out, I have a Garmin watch that tracks my data. Why am I not able to monetize this? Garmin makes money with my data, they sell it off. YouTube sells your data, I 100% guarantee you. Google sells your data. Why are you not being paid for your data? And maybe your data, because you have a tech business, you do this, is worth more than me. I'm a normal guy, a normal job, kid, I'm a boring guy. Why isn't let's say you're into wall climbing, you're into mountain climbing, your data is worth more. So we're going to come to an era where we're going to be able to monetize our data. And this is what's happening with Web3, by the way. We're able to actually have on these platforms and be able to, to sell your data as well. So there's a lot of value creation that is happening on all these things, and often in ways we don't think about. NFTs, personal data, all these things will happen, and it's going to be very, very exciting in the next couple of years how that is going to actually evolve on that perspective.
So one last question.
Yeah.
We are running out of time.
Perfect. I love how we're on time. I love it.
Yeah, apologies, I came a little late, so I might have missed the session. So the question is, when the crypto and everything, it came to this, right? So how did you take it on a personal level?
Yeah.
And what changed you, from the normal cash flow kind of dealings to the crypto market? That's
Yeah.
one question, right? Second question is, as a Muslim, we worry about our cash, right? We worry about where we invested and then where we keep it, what happens to our money and everything. So as a Muslim, we are very worried about the riba free, the halal, haram category and everything. Right? So what do you think about Sharia compliance and crypto?
Yeah. Very good question. Let me start with the Sharia compliance and move on. So Sharia compliance, there's a lot of actually, the whole debate here, right? But actually when you see with Bitcoin, it's like gold, right? So same thing on that perspective. Where it becomes a bit more tricky is a lot of the crypto platforms that are offering yield products. And that's where there's obviously issues with Sharia compliant products. But the reality is, the way I look at it is really Bitcoin empowers basically people to be able to send money around the world, be able to use it, transact in a similar way gold and other systems have done it. So there's a lot of actually now what I call Sharia compliant crypto products are coming up. There's different structures on that, and it's a whole different conversation on that. Where I think the banks will play a big role actually in the UAE, offering Sharia compliant digital asset products to customers in the same way that exists on traditional financial products. On the personal side, so I've been in it since 2014. At the time I used to work in a bank, I remember coming in the morning in the bank and say, come on, why do we have these hundreds of people on the trading floor? It makes zero sense. And that's how I discovered fintech. I was there when the word fintech was being coined. I remember the first fintech conferences, we used to explain what is fintech before the conference would start. I remember, so I organized my first Bitcoin event in March 2014. And the event where I organized the event got complaints saying, why is Henri Arslanian doing this money laundering event? There's pictures of this event now, and it's crazy how times have changed. But it's been very challenging because even the UAE, here, my banks here multiple times in Hong Kong here have tried to close my accounts. The best example I always give is Citi. I don't know if nobody works at Citi here, but Citi, about 2 years ago, tried to close my account. They come on Thursday like, man, we cannot tell you why. We have to close your account. I say, hey, why? And they say, you're a PwC partner in charge of crypto. and we decided it's high risk. I'm like, that's interesting. That Monday, the investment bank of Citi was publishing one of their first reports on crypto, and I was on the cover of the report. I said, guys, you better fix this over the weekend. Monday, I'm going public with this. And it showed you how the bank, one part of the bank was trying to promote this. Literally on the cover. And the bank, it's like, robots. Like, high risk, okay, let's go guys, crypto, close down accounts. Not understanding. The biggest problem, I think, which I think now in the US, they're starting legal action against a lot of these banks, but where it was such an easy target to go against the crypto industry, we close it down. It's too risky, money laundering, blah, blah, blah. Without people spending the intellectual time to at least to understand how the digital asset works. And it was not easy. I can tell you, especially after FTX. Because FTX really was a big blow to the industry. I remember saying if the industry survived this, it's going to survive anything. But there was a big human cost to FTX. As I mentioned, my interview with the regulator will go live next week. I'm actually believe it or not, the last person with whom SBF, the founder of FTX, I'm his last public interview. I'm going to publish it today on my social media. Exactly a week before he went bankrupt, his last interview was on my show. It's very funny now you look at it, it's ironic. But there's a big human element. I remember the day FTX went bankrupt, their offices were here in One Central. They got the penthouse of the last office with the view of the Museum of the Future. And the day afterwards, I actually called, a lot of people that worked at FTX used to work for me before at PwC. I remember I called one of them, a guy that used to work there. He was in the accounting team, Originally from Pakistan, worked for FTX, was living in Asia, I went there. And I called him and said, he said, Henri, I cannot talk to creditors, I cannot talk to you. I said, no, I'm calling you as a human being, how are you doing? And he started crying. He said, you know what? FTX, I just lost my job, I lost my salary now. All of our savings are on the FTX platform. I don't have any healthcare anymore. And my wife is giving birth next week. What I'm going to tell her, what I'm going to tell my family. Can you imagine this human shock to it? Right? I remember the day after FTX, the week after, one day I went to buy donuts. And I went to the FTX offices, I knocked on the door, I said, guys, and they were all afraid. And then, not the SPF, another guy here, he's like, I opened the door, and I went and I gave them donuts. And I said, guys, this is just for you at a human level. And they all started crying. Because they were all being seen as criminals. They had nothing to do with this. This was done by 4 or 5 people at the top. The staff had nothing to do with this, right? And these guys had next couple of years, it was very difficult for them to get jobs just because they were affiliated with FTX. So we forget all these things that happened over the years, but FTX was a typical fraud. It was a typical Ponzi scheme, nothing to do with crypto. It was like Bernie Madoff, it had nothing to do, it was embezzlement of customer assets. This has happened over and over. It happens all the time in traditional finance. But it became such an easy target to go after the crypto industry afterwards. And then, like I mentioned at the beginning, crypto became such an easy target to go on after. And the fact that now the industry has rebounded now shows you how crypto is here to stay. I think the argument that crypto may disappear, that argument is gone now. The asset is worth more than $4 trillion. There's over a couple of trillions now trading every month. And whether we like it or not, some form of it is now going to be the future of money. So, guys, thank you very much for everything today. Thanks for letting me share my passion of the future of money with you all. Again, there's books for each one of you. They've been pre-assigned with your name. So make sure I'll let the guys take care of how it's going to be delivered. And if not, of the others, I'll make sure there's extra ones as well so we can sign them for you as well. Thank you very much, everybody, on that perspective.
Just ask one final question.
Okay, good. Yeah.
I read in news that quantum computing can break the Bitcoin code. Is that true?
A big question to end. Yeah, so in my book, actually, you'll see there's a lot of information about quantum. I talk about a lot of my other stuff as well. So let me give you the short answer. Can quantum computer attack the Bitcoin algorithm? The answer is yes. The short answer is yes. The problem is the quantum computing can attack everything. If the day someone has quantum technology, honestly, Bitcoin is the least of our worries. It's your phone, it's government data, defense, intelligence, everything is basically being attacked. The reality, quantum technology will happen by a country. It won't be a company. It'll be a state nation. It's probably going to be China or the US or Russia. It's going to be one of these countries that has it. First, we're still very early on. And the way quantum works, you need to be isolating qubits. We're still very, very early on. But it will happen in our lifetime. We'll have quantum technology. So can it attack the Bitcoin network? Yes, but it can attack your cell phones, everything. Now, in the Bitcoin network, not to get too technical, but we use two kinds of algorithms. We use something called SHA-256, which is what you use in everyday daily life. And we use an algorithm called ECDSA, which can be attacked by quantum. In crypto, what we call a fork. So if we're close to we're close to quantum technology being available, the Bitcoin network can do a fork. It happened many times over the years, where we can fork to a quantum-resistant algorithm. So that is easy to do. The problem is, in the first 18 months of Bitcoin, so when Bitcoin was invented, the white paper came out, as we discussed, on Halloween Day 2008. The first block was mined in January 2009. Up to 2010-ish, mid-2010, when you would send transfers, you would send them to the public address of a wallet. Now we send it to the hash of a public address. The problem is a public address could be, with quantum computing, brute forced to finding the private key. This is like, I don't have time in this. Normally when I teach the class, I explain public keys, private keys, and we go in more detail. But that is possible. So there is actually the early Bitcoins that Satoshi sent could be at risk of quantumly being reversed. Now, there's a game theory involved. If, let's say, I'm Russia and I found the quantum technology, the first thing I'll attack is like defense industry, security, personal data of my enemy countries. Like, you're not going to start attacking Bitcoin to get that couple $2 billion of Bitcoin of value. But let's say you do it. The problem is game theory. Right? So as soon as Russia, or I'm nothing against Russia, quantum, but like any country has quantum and attacks the Bitcoin network, the value of Bitcoin may fall. So the game theory says that why will you attack something that whatever you hold will be worth less money afterwards? So there's a bit of that as well going on. But the short answer is yes, there's some Bitcoin that are at risk, but we could easily fork it. But really, quantum technology will happen in our lifetime. Really, that is the least of our worries. It's going to be like a Y2K event that we're going to need to upgrade a lot of the stuff we have today. And the one I'm worried the most is government data, by the way. I'm worried about data that governments have on citizens. And as you guys know, governments are not always the most up-to-date with the latest technology. That's where I think it's going to be a problem, especially emerging countries. That's where I'm really worried about. But yeah, it has an impact on Bitcoin.
Thank you.
Thank you very much, everybody. Thank you.
It was a very wonderful, informative, and inspiring session. Actually, energy-packed session, I can say.
Good. That's what we need.
And now it's time to express our gratitude.
Thank you.
Memento, we were here to welcome Mr. Suhail Abdullah, Chief Strategy and Investment Officer, to hand over a small memento.
Thank you very much. Thank you. I appreciate it. Thank you very much. Thank you. Let me put this here. Excellent. There we go.
And also thank you very much for your time. And I think it's not only just an inspired session, they are very attentive, and there are a lot of questions which came up.
Excellent. Thank you very much, guys.